Hi, this is Devin Clark from TradeDirect365. One of the challenges for many traders is the how-to of successful trading. TradeDirect365 has brought together some of Australia's most experienced traders and educators to help you in mastering the art of trading. This webinar is brought to you by TradeDirect365, a simple, inexpensive and fast trading platform.
Good afternoon everybody, and welcome to this afternoon's TradeDirect365 webinar with myself, Justine Pollard. I'm your guest presenter today, and I'm very excited to be showcasing with you my trading approach and showing you how I run a live market scan and place a trade on the TradeDirect365 platform. Now, just before we get started, I just need to remind you that although I'm licensed investment advisor, I cannot provide any personal investment advice or make any recommendations in relation to your own financial circumstances or the current and future value of securities or security markets. Smart Trading is a corporate authorised representative of FINSA, and as such, any information I provide is done so as general advice only. The information may not be suitable to your own individual circumstances or needs, and you should always obtain independent investment advice from a licensed investment professional prior to making any investment decisions. Now, in the presentation today, I have provided many charts, and I will be referring to securities throughout the session and also running a live market scan. So all the information is for illustrative purposes only and is not to be taken as a recommendation. I also cannot answer any questions requesting advice or a recommendation to a particular share or security. My goal is to share with you how I view the market and make my trading decisions. Okay, so let's move on. And firstly, let me tell you a bit more about myself and who I am. So I'm a mum with 2 young children, and I learned to trade well before they came along. But my goal of learning to trade the stock market was so that I could stay at home and be a mum and have something to do and bring an income in. So I'm a private trader, and I started my trading journey back when I left high school, which was back in 1991. So my grandfather pretty much said to me, okay, you've saved up some money from part-time work, why don't you trade the stock market? Invest in some shares. And I said, I don't know how to do that. He was very much a fundamental trader, and he bought shares with high dividend yields. So he pretty much chose 4 shares for me, and I invested in those 4 shares. I remember one was St. George Bank, one was Boral. There was 2 other companies that did change names over the time that I had them. Now, I had a very good experience because you could pretty much buy anything you wanted in the 1990s and make money. And I sold those shares in 1996 when I bought my first investment property. So as you know, when you buy your first property, you put all your money into that deposit and then you've got no money. So I pretty much went from having some money to now having no money, and also becoming a property investor. But I was so keen and eager to take control of my finances that I continued to learn, and I went to lots of trading seminars throughout the next couple of years. Then in 1999, I came across some property and share trading seminars that taught me about technical trading. And I fell in love with technical trading and bought Metastock, which is a charting software I use. And I've been trading with Metastock now since the year 2000. So I then left my full-time job at the end of the year 2000. My husband and I decided, well, let's see if we can make a go of it and if I can create an income from trading and stay at home. So when we do start a family, I've got something at home. So in 2001, I started my journey as a full-time trader. Now that was a huge emotional journey, to say the least. There's so much psychology involved in trading, and it's not until you start trading more regularly and putting your money in the market that you realize that. And so I had a great run to start with. I was trading short-term intraday trading options, and I used to think the more I traded, the more I watched the screen, the more money I would make. But the reality was the more losses I also took. I had a 3-month period where I did very well, and then the World Trade Center crash hit in September 11, 2001. And that pretty much wrote off all the profits I'd made for the year plus some more. And that was a huge realization and a kick up the backside for me to realize, hey, was this just all a waste of time, everything that I did over this year? So I actually took a break from trading and reassessed things and really had a look at what went wrong over that period and realized how overexposed I was in the market and how I was undertaking high risk strategies. So for me, everything changed after that day. I rewrote my trading plan. I moved away from the options market. CFDs had come into the marketplace in 2002 and I developed my CFD trading strategy. So along with that, the next couple of years, as my trading progressed, I also became a trading mentor. People started asking me to teach them, so I fell into the teaching side of trading. And I find the best way to teach is to basically share exactly what I do in the market, and that's what I do to teach people. I'm also the author of Smart Trading Plans. Wiley called me up in 2007, that's John Wiley Publishing, and asked me if I'd write a book on trading plans. I was pregnant with my second child at the time and thought, well, it's probably a good time to take this opportunity before the baby comes along to write a book. So I was very excited because I have a big goal of teaching people about writing a trading plan because I believe that's very important before you start trading. And now I've got a book available to teach you exactly how to do that. And it also comes with free trading plan templates that you can download to help you do exactly that as well. I've also been included in many other books, including the Wiley Trading Guide, Miss Millionaire, 20 Most Common Trading Mistakes, and Real Traders, Real Lives, Real Money. Plus, as I've already mentioned, I love technical trading, so all my trading decisions are based on charts. Let's now move on and find out a bit more about my trading approach and how I trade the stock market. As I've already mentioned, I view everything using charts. And on the screen here is an example of a weekly chart with a 30-week moving average on the chart. And what I'm looking at here is the 4 market stages. Everything I view in the market is based around these 4 market stages. And what I mean by the 4 market stages is the first stage is a stage 1 base. And that's where the market will be going sideways. Eventually it will break from a resistance area and start making new highs. When it starts making new highs and the candlesticks, when I talk about candlesticks, that's all price bars if you prefer price bars. I look at everything in candlestick format. And when those candlesticks are rising and that 30-week moving average is rising and the share price is above it, that's a stage 2 uptrend. And that's when you want to be trading long in the market, mostly. Then eventually the market will go into a stage 3 top and will start to go sideways. Now this is a difficult market to trade, just like the stage 1 base is difficult as well. So usually what happens, it can zigzag around for a period of time and it will build up some support. Now if it does break through support and starts to make lower lows and those candlesticks are now falling and the moving average line is also falling with the candlesticks below it, that is a stage 4 downtrend. I do not want to own stocks that are in a stage 4 downtrend, but I'm happy to short sell them through this period. And I can short sell them with CFDs. Then eventually the market will settle and go into a stage 1 base. And that's when the market is seen to be overvalued and people want to start buying into that particular stock again. So that's a quick summary of how I view the markets. And I pretty much trade them with 2 trading systems, which I'll talk about in a moment. So I'm a mechanical trader and my whole goal is to exploit trends, exploit that stage 2 uptrend and that stage 4 downtrend. Now everything I do is based around strict money management rules, which is all about following that golden rule of trading of letting your profits run and cutting your losses short. And the only way you can do that is by having those money management rules. And the sorts of rules that I incorporate into my trading plan include sizing my trades based on a position sizing method, which you'll see me do that today, managing my maximum open market risk in the market through a strategy called portfolio heat, where I'm always managing my total open trades in the market and I can only open new trades as trades start to become profitable. So I always know my worst case drawdown tomorrow if things don't go well in the market or if there was a big drop or something went against me. Basically protecting myself if ever there was another World Trade Center crash and the market had a huge drop in one day. I also boost my winning positions by adding to my trades through a strategy called pyramiding. And I trade both shares, which I trade long only, and CFDs, which I trade both long and short. So my trading systems pretty much comprise of MetaStock, which I have set up to run my scans looking for entries, and then I have my trailing stop loss indicator on the chart for my exits. I then use a Smart Trader spreadsheet, which is a spreadsheet that I developed for myself and that my clients also use, that helps me to track and manage all my trades. Because as a trader, you need to know where you are in the market all the time. And I trade with two main systems. I have my long-term weekly system that's focused on holding shares from a few months to a few years. Now that system's all about trading that stage 2 uptrend and sticking with shares that are in stage 2 uptrends for as long as it's going to run for. Then I have my medium-term daily system that focuses on holding CFDs from a few days to a few weeks. And that system trades both long and short in direction. And that's my most active system. And I can have an average hold time in a good trending market of up to 30 days. I might hold a losing trade for a couple of days because losing trades will always have a shorter hold time. And I'll hold a winning trade. I could hold a winning trade for 60 to 90 days. But they average out to be about 30 days. So what I want to do now is I want to show you exactly how I trade each day, because I have my trading systemized down to about 15 minutes of my time each day. I pretty much around 3:30, 3:40 run a market scan based on the 3 o'clock data that day. I will then select a trade that I like from the scan. That's saying that I can open a trade today. I've got enough trading capital and my portfolio heat will allow me to. And then once I've selected a trade, I will position size it using my position sizing calculator, which is my first risk strategy that I used, and that's the most important one. And then I'll place the trade on the CFD trading platform. So that's pretty much what I do around that 3:30, 3:40 time each day. Now, not all my clients can trade at that time, so they will run their scan of an evening, and they will then set up the trades in the CFD platform, so that if the trades go their way tomorrow, the trades will activate in the market for them. Or they'll set a time while they're at work to check the market and place those trades on the web-based platform. So let's jump over to MetaStock now and let me show you exactly what I do. So let's say it's 3:30 right now. I've downloaded my data. Usually the first thing I do is I have a look at the ASX 200 just to give me a feel for what the market's been up to today. So this is the ASX 200 and I can pretty much see that it's had a down day most of today. If I go to the weekly chart, you can see the 4 market stages in the ASX 200. You can see the stage 2 uptrend. You can see where it topped out and started to go into a stage 3 top, and once it broke and started making new lows and was falling, that's your stage 4 downtrend. It then had a sharp recovery and then went into a long-term basing pattern over here for quite a few years, which was a difficult market to trade, but I was able to capitalize on that by introducing an aggressive exit strategy during that period. But now we've had a strong rise and we've got this moving average line rising and we've got the share price predominantly above it. So I'll just zoom in here. So we've had some new highs being made just recently as well, and the market's having a pullback. I mean, it could potentially pull back down to its trend line. But as long as it bounces off its trend line and it continues to make higher highs, then that confirms to me that it's still in that stage 2 uptrend. So what's going to happen next is my scan's going to tell me what the market's been doing and the direction that I should be trading today. So I'll go back to the daily chart there. I'm just going to close that down. And I'm going to run my daily market scans. Now I run a scan on the long side and the short side of the market over the ASX 300. So I'm just going to run a scan on the long side of the market now. And now the top 300 today, only one share has come up. So I'm going to open up that chart for you right now. Now let me just run the scan on the short side of the market. And as you can see, a lot more shares are giving me short signals than long signals today. So the market is having quite a pullback, and there might be some short opportunities to check out as well. So I'll have a look at those shares in that report in a moment. So this is the one and only share that came up in the long side of the market. And if I go over to the weekly chart, because I like to jump over the weekly chart from time to time to see the trends. Okay, so we can see that this share has had a strong fall. It looks like it's been basing for quite a period of time, and now we've had it break out of its resistance just here, and the moving average line is starting to turn up. So if I go back to the daily chart, it's looking like a good trade to get into on the long side. It's had a good run here, it's broken this support, risen up, pulled back, and it's holding that support level, which is a good sign, and now it's jumping up here today as well. So for a long trade, that was the only trade that came up, so there's no other choices to really make. So that would be the long trade that would be selected today. Now if I go over and look at the short scan, and I'll open up those results over there, and basically we'll see what's going to give me the best choice today. Now this is every share that came up in the scan that's open now, and what I'm looking for is there any immediate support? And in this case, this particular one has immediate support, and I'm not comfortable short selling this one, so I'm going to exit that particular chart. Now here's the next one. Now I can do this very quickly, and my first reaction to this is this share is just going sideways. And if I put my support and resistance lines on the chart, there's the support around that level, and there's some resistance around this level. And so at the moment this is just ranging. I mean, you could look at doing a channel trade on it if you wanted to, but if I've got some good trending shares to pick from, I'd rather pick them than waste my time on channel trading, because channel trading only allows you to get small profits. But that's something that you could think about. So right now I'm not interested in that one because it's going sideways, so I'm going to exit that down. Now this next one also looks like it's just getting support around this level, and because it has immediate support, I'm not interested in that one either. This one is the same. It looks like it's just going sideways and getting support around that level. It's a bit of a descending triangle action happening there. And it's also sitting right on the round number of $3. So I'd rather see it break $3 before I would short sell it. So I'm going to exit that one. Now this one looks interesting. I'm just going to see what the trend is doing in this one. Okay, so very interesting. Let me zoom in a bit more and look at that beautiful break. This is what I like for short selling. We've got an uptrend line that's broken. We've got a support line, which was resistance here, support there, and a beautiful breakthrough that support line. Definitely have an interest in that one, so I'm going to minimize it. Let's look at the next one. Now this one just looks like it's going sideways as well at the moment. So I'm not interested in that one right now. It's still getting a bit of support. Now this one's had a huge drop, that's for sure. So it's definitely looking unhealthy with a nice gap move. Now the only thing that bothers me is it's right near the dollar mark. I find that round numbers can provide support for a share on $1, $10, $5 and that sort of thing. I'm probably not feeling as confident because you can see when it got near the dollar mark last time how it got a bit of support. So that would be the only thing that would hold me back on that one. Plus the other thing I'm just noticing there is there's divergence, bullish divergence in the MACD histogram. What you're seeing on the chart here is exactly how I look at all my charts. I've got the average true range indicator up here, which is something that I use to help me set my stop losses. I have an MACD histogram, which helps me with my decision making tools. When I've got more than one share to choose from, I will consider looking at this. And if I'm getting a diverging signal where it's doing the opposite to what the share is doing, it helps me narrow down my choices. Now I view everything in a candlestick format, and I have the 30 period moving average on the chart. So when I move over to a weekly chart, I can see those market trends in there. And although this share is now hitting the dollar mark, it really just looks like it's moving back down to a support area from the past. Even though it's a really good gap down, if you look at the weekly chart and you take away all the noise, because one candle on a weekly chart is 5 candles on a daily, so it gets rid of that noise, you can see a much smoother trend in there, and it just looks like it's coming back down to support. So there's a lot of things there that don't look favourable for me, to take a short trade on this one right now. So I'm going to exit that chart down. Now the other thing I have on my chart is I've got the volume at the bottom of the screen and I've got a moving average over the volume. So it's always good if there's a spike above the moving average on the day that I'm entering. Now I'm running my scan in the middle of the day, so there's not a lot of volume that's shown up yet, so it's hard to rely on it in this example here. Now this next trade I'm also not interested in because it just looks like it's going sideways. I can see where it's getting resistance around here and it's getting support around that level. So I'm going to close that down. Now this one here as well, just going sideways, so I'm going to close that down. Now this one probably looks a little bit more interesting, and I can see that this share has been trending previously. If I go to the weekly chart, it's basically been zigzagging around now for quite some time. So it looks like now it could be having another fall, and the next resistance level is just near the $4 mark. So if we go back over here, it's trading around 527, and this next, I said resistance, it's actually a support level. This next support level would be far enough away to still have a profitable trade on this one. So I'm going to minimize that one. And let's look at the next one. That one's going sideways, so I'm not interested in it. And now I'm back to the shares that I've minimized. I've got the one long trade that came up in the scan, and I've got the two short trades to choose from. So there's this one, and there's also this one. So they both look very attractive, and it would be a matter of picking from one of these. So if I look at the next resistance level on this one, you're probably looking at about $12. So based on that, that's still far enough away to at least have a profitable trade running. So they would be my two choices for short trading at the moment, and neither of them have any divergence for me to worry about. So for now, what I'm going to do is I'm going to just pick one of the trades, and because this one has had a beautiful break of an uptrend, let's have a look at the weekly chart. So on the weekly chart, this one is still looking healthy because that moving average line is still rising and the share price is above it. So that's showing me that this is still in a healthy trend right now. Even though it's broken its uptrend line, it could potentially now form a stage 3 top. So it is looking healthy on the weekly chart, or if I go over to the other one and we look at the weekly chart, this one is clearly looking more unhealthy because the moving average line is rolling over and the share price is below it. So that's going to help me make my decision, and I'm going to choose this share for that reason. So what I'm going to show you now is how I actually place a long trade and a short trade on the CFD platform. So I'm just going to close this trade down. So first of all, let's look at placing the long trade. Now the first thing that I do is I position size the trade. So this share was last trading at about 48.5 cents, and it has an average true range of 0.018. Now a good place to set my stop loss would be below this support level here. So I want my stop loss set below 42 cents just in case it does pull back. So I mean, the last low that it made, it actually pulled back to exactly 40 cents. So if you want to be more conservative, you could go below 40 cents to allow for that pullback. So I'm roughly going to say it's got a 2 cent ATR and it's roughly trading at 48.5 cents. So what I do is I go over to my position sizing calculator, I put in the details of the trade, the code's APN. It's trading at 0.485 and it's roughly got an ATR of 2 cents. So if I was to use a 3 ATR, because I take a multiple ATR to select my stop loss, it would tell me that my stop loss should be sitting at 42.5. And as I mentioned, I would prefer it to be below 42 cents. So I'm going to go to a 4 ATR in this case, and that is 0.405 would be where the stop loss is sitting. So I go back, and if I'm looking at about 0.405, that's about that mark there. So it's definitely below the 42 cent mark, which is a good sign. And now I could actually go a bit wider if I wanted to and do 0.395 just to put me under 40 cents. So technically I'm looking at considering the ATR and where it is on the chart. So if I use 40 cent as a good price point and go below that, then I would be happy with that. Now, if you've got $50,000 trading account that you're trading up to, you might have $50,000 in total. You put 20% over that to the CFD provider and you trade it up to $50,000. For example, 20% of $50,000 is $10,000. So you'd have a $10,000 account with a CFD provider and you trade it up to $50,000. And I position size everything based on my total trading account of $50,000. Now, depending on what you're comfortable losing on a trade, now I risk 1% of my capital, which in this case would be $500, which means I'm prepared to lose $500 on this trade. Now, some people are more comfortable on higher risk and would be happy to lose, say, 2% on a trade, which would be $1,000. Now, if it was $1,000 risk, you could buy 11,111 CFDs. Now, I round things down, so I'd go in and buy 11,000. If you were risking 1%, then you could buy, say, 5,556, so 5,500 CFDs, setting a stop loss at 0.395. So I would now go over to the TradeDirect365 platform and I would search for the trade. So here's the platform here. I'd put in APN because it's APN News and Media, and I click on that. And here's the information here. Now it's currently now trading at 49 cents if I'm to place a trade now. If I look at the market information, it's got a 10% margin on it. So I'd be outlaying 10% of the total trade size to open this trade. So to actually place the trade, I press the trade button. Now, because the buy price right now is 49 cents, I have to go back to my position size and calculator and I put in the trade price of 0.49. That means I can buy 5,260 CFDs with a stop loss at 0.395. So I go back over here. I say I want to do a deal. I want to buy 5,260 CFDs and I'm going to set my stop loss at 0.395. Now based on that stop loss, it's telling me I could lose $499.70, which is correct. Now all I have to do is place the buy order and you can see the price changing from sell to buy here. It was 49 cents a second ago and now it's gone up to 49.5, and that will continue to change. Now you can sit here for a moment and see if it gets back to 49 cents, but as soon as you click on the buy button, that stop is going to be placed. There's a few other things that you can do in here. You can set a guaranteed stop loss order, so if I wanted to guarantee my exit at 39.5 cents, I would just tick that box. You also have the ability to set a trailing stop so many points away as well. And it also tells me here the funds required to place that trade, which in this case would be $310 roughly. Okay, so I'm going to place the trade now and I can see that the buy has dropped to 49 cents, so I'm happy to put that trade on. I just press the buy button and the trade now goes through and is confirmed. And you get a summary of the information of the trade that you've just put on and the stop loss that you've just set. And I'll close that and you can see the trade in the open positions down the bottom here. Right now, because the last traded price was 48.5 cents, I can see that I'm negative $26.30 currently. Now I'm not concerned about this. Basically, I will now trade it as per my trading system. If the share goes my way, let's say it rises to 52 cents in the next couple of days, I will adjust my stop loss accordingly. And the way that I do that is I can simply click on this pull down menu here. I can edit the position, close the position, and so on. So if I click edit position, a box comes up and I can change my stop loss accordingly. So if the share goes up, say 2.5 cents, my stop loss will also rise about that. And let's just say it has risen and my stop loss is now at 42 cents. I can just adjust it, press the submit button, and it will also adjust in the trading platform here as well. I amend my stop losses as things go my way. Now I can adjust it back. The other way is you can just double click on it and it brings up the edit box. So you've got the pull down or the double click. I change it back to where we had it of the 39.5 cents for now. Okay, so now I'm going to show you how I place a short trade. So that trade is now open, so I add it to my favorites folder in a folder called Open Positions. I'm just going to close that down. And now I'm going to place the short trade. So right now, this share, roughly trading about $5.27, it has an ATR of 19 cents. So I go over it and I position size a short trade on BKN. So 5.27 and 0.193 I think it was. So that tells me that my stop loss, if I'm to use a 3 ATR stop, should be set at $5.85, say. So if I go back to the platform, $5.85 is this level here, which is a good price level. I could be more conservative and go above the $6 just to be above that round number. If I go back and I put in a 4 ATR, that would be $6.04. So I'd be happy with, say, $6.04. Now, risking $500 on that trade, I can go and buy 648 shares. In this case, I'm going to buy 650. I mean, not buy, short sell, because I'm doing a short trade now. So I now go over to the platform and I'm going to look up that particular share. Bradken is here. Now, it's gone up a little bit. So if I'm to do a trade right now on it, I'd be selling it at $5.32. So if I go back, my actual price is going to be $5.32. If I'm going to keep the same stop loss of $6.04, I can buy 694 CFDs. Now I'm going to round it up, so I'm going to short sell 700. So I go back to the platform. We're going to sell 700 of them, and I'm going to set my stop loss at 6.04. And if that hits, I'm going to lose $504. Now, to sell, I just press the sell button. I can also see the margin $753.20 as well. So I press the sell button and the trade goes through. And I've got a summary of the information. I just close that now. Okay, so now I've got the two trades in here. Now, quantity minus 700. That means it's a short trade. That's why it's got the minus there. And if it's a long trade, it's in blue and it sits like that. So if there is a minus, it means it's a short trade. And same if I want to adjust the stop loss, if it moves lower and goes my way, I can just double click and adjust the stop loss. Now, if you can't run your scans till the evening because you're working and you run your scan that evening and APN comes up and you say, okay, great, if it moves higher again tomorrow, I want to get into it. So what you'd have to do differently with that, I'll just look up the APN one again, is you'd actually set up an order to open trade, because the market wouldn't be opening if you're setting up of an evening, but you can actually do all your market trades, set everything up without having to trade while the market's open. So you might say, well, tomorrow, if APN moves higher, I want to get into the trade. So I can buy 5,260 of them. Now, I'm going to be doing a stop entry order in this case, because it's a stop entry order. Now, the level that I'm going to get in at, now you usually have to set it a certain number of points away. So let's say if it moves to 50 cents, I want to get into it. First of all, I better click, it's a buy order, because it can't actually work things out till you click on buy or sell. So I click on buy. Now I can place the order because it's got as long as it's greater than 49.8, it will go through. And then I just put in there what I want my stop to be set at. Now in this case, I've got to put how many points away it will be. At the moment there's no level to set, but eventually that will change. This platform's being upgraded all the time. So if I was going to have the stop loss set at say 40 cents, and that's 10 cents away, I put 10 points away at 40 cents, and then I can submit the trade. It tells me what the margin will be. I press submit, and this trade goes through as an open order rather than an actual open position. So if we come down here, you'll see it's not in my open positions, but if I go to open orders, there it is sitting in there. So I'm going to buy 5,260 at 50 cents, and if that goes through, a stop loss will activate. So I can double click on that if at any time I want to change it, and I can adjust it accordingly, or just say APN falls quite heavily and it no longer looks like it would be something I'd want to buy. I can just simply delete it as well. and it will no longer be there. So you can also set trades up as well outside market hours. So once I've got trades open, the next thing I do is I add them into my Smart Trader spreadsheet. If it's a long trade, I copy the long worksheet over, I put in the code, in this case it's APN, I put in the date that I purchased, I enter in the ATR amount, 0.02, I bought in at 49 cents, and I set my stop loss a lot wider at 0.395 it was, and I bought 5,260 of them. And this then helps track my trades. Now, I know that I paid $5 brokerage, so I put that in as well. And I pretty much know what's going to happen if my stop loss gets hit. Currently, my stop loss is sitting at 0.395, so I'm going to lose $510 roughly with brokerage included. As things move my way, just say it goes up to 52 cents, then my stop loss will adjust accordingly and things will adjust as well. Then I add the short trade in as well and put that into the spreadsheet with all the same information of what I shorted it at, which had 0.193. I shorted at $5.32. I used a 4 ATR and I had my stop set at 604, and I went in and bought 700 of them. So, and I paid $5 brokerage. Great. And my stop was set at 604. So then all I do is put them into the summary worksheet. I copy them in. I copy an existing one. I'm just going to copy 2. And I just basically copy the information for that trade into the spreadsheet. So I'm going to replace the new with APN, replace all, okay, and I'm going to replace that one with BKN, replace all. Okay, and now the 2 trades are in my summary sheet and the information goes over to my totals page. And it tells me based on my $50,000, I've now got $42,000 left to trade. My portfolio heat of 5% has dropped down to 2.9 because I've got 2 trades open where I'm risking 1% risk each. If at any time my available capital is 0, I can't do any more trading. And if my total available risk is 0 or negative, I cannot open any more trades. So it's all about the trade management from there on in. And that's the most important part of trading, and having the trailing stop losses. So the next thing I'll do is I'll put my trailing stop loss onto the chart. And it's then placed on the chart. And I'll do the same with the long trade as well, and I will add it to my open positions. And I will then look at them each day and track how they're going, and do I need to edit any stop losses. Okay, so that's pretty much what we've just been through. I've just run a market scan. I've selected a trade, a long and a short one, to show you how you place both on the platform. I've shown you how I then position size the trade, and then how I place the trade on the TradeDirect365 platform. Now on the TradeDirect365 platform, you can place orders at market, which you saw me do, and set stop losses. And you can also set stop entry orders with if done stops. So I showed you how you'd actually set a trade up outside market hours as well. And that's a great thing to do, especially if you work full time. You don't have to be active during the trading day. You can set all your trades up and let the market put them on for you. And then after that, it's all about the trade management. I put the trade into the Smart Trader spreadsheet. I update the information of the trades as I move my way. I edit the stops in the TradeDirect365 platform, and it's just all about following my trading plan from there on. So that's a summary to show you my trading approach and how I actually place a trade. And of course, there's a few more things I want to share with you too. I want to show you some actual real trades that I've undertaken. On the screen here is a long trade that I have had open in the past. I entered into this one on the 2nd of August at $3.80. Now, as I mentioned, when I enter into a trade, I put my trailing stop loss onto the chart. Now, I exited out of this one with an aggressive exit strategy. This share hit $5 and then it showed rejection of $5 and fell away. Now, $5 was a round resistance number that from the past, you can't see on this chart, it had reacted to every time. So I have a rule: if certain things occur in the chart of the share, I will exit before my stop is hit. But if I do use my aggressive exit strategy, I have to get back in there if it then continues to become healthy again. In this case, it got back up to $5. Looked like it was going to double top and fall away, but lo and behold, it gapped through the $5. Now, as I saw it approach $5 and fall away, I actually knew I'd want to get back into it. So I actually set up an order that if it broke $5, enter me in, and this is my stop. So I was automatically entered back into this trade on the 15th of October, and I'm still in this trade right now. So ideally, I usually enter a trade and I usually exit because the stop is hit. But if certain things occur based on my trading plan rules, like a win for profit or aggressive exit rules, then I will exit before my stop is hit. And I also have a strategy where I will sell half at certain points in time as well. So that's my daily swing trading system. I'm never going to stay in the long-term trend of share. My goal is to take out a chunk of an already trending share. And the first trade that I undertook in this one, where I entered here and exited there, I held that trade for 60 trade days. I made 10 cents per share on a dividend that was received. Now, if you're in a CFD and it pays a dividend, you will receive the dividend in your account overnight on the ex-dividend day. You don't have to wait for the pay date like if you would have to if you own the share. The only difference is you don't get any franking credits. Now, I made 24% on the total trade size, and because there was a 10% margin on that particular one, I made 244% on the actual capital outlay of that trade. And now I'm waiting to see what happens with the next one and seeing what pans out in the market, because that trade's still open. Now, here's another trade that I undertook. It once again also came up in my trading system. It had a breakout, it fell back, and now it was bouncing, so I entered into it. And then I simply traded it from the 21st of August to the 26th of September when it simply hit my stop loss. Now, I held that trade for 26 days. I made a 10% return on the total trade size. Because it had a 10% margin outlay, I made 98% return on the margin amount. And I did get a dividend in there of 2 cents per share as well. Now, it actually came back down and it bounced around, and on the second bounce up when it came up in my scan, I liked what I saw because it was getting support, so I re-entered back into it. Now, I re-entered back into it at 74 cents, which was actually the price that I exited out last time, and I'm still in it now, and it's moved above the dollar mark. So while it's holding the dollar, that's a really good, healthy sign. So right now, that trade is still open, and this second trade will be much profitable than that first trade. So you can see how I took a swing move in here, and now I'm taking another swing move in here. Now, here's an example of a short trade I have open because I am shorting in the market as well. If I get a really good short signal. This share had a really strong gap down with good volume, breaking through its uptrend line, and also just moved below $4. When I looked at it, it was trading just below $4. So my entry price was exactly at $4. Now, that trade's still open and active, and there's been no reason for me to get out of that one. Beautiful, beautiful trade. There's my trailing stop loss indicator, and it's been moving my way. So that trade's still open. But of course, not every trade's going to be a winning trade. Here's an example of a losing trade. I mean, I will enter it based on the same setup. Beautiful break of a resistance line here with a gap. Moves up. 3 days later, wham bam, hits my stop. But I'm glad that I got out when it hit my stop because it certainly got worse thereafter. So I held that for all of 3 days. Made a negative 20% return on the total trade size, and because it was a margin amount, made a negative 83%. But I know that I didn't lose more than my risk amount on that trade. I didn't lose more than my 1% because my stop loss was hit. So my goal is to keep my losses small at no more, never take a loss bigger than 1% of my capital. I will have some trades when my stop loss goes my way for a little bit, and I will take a small loss on it. And then I want my winners to be much bigger. So as you saw, this trade here is a beautiful winning trade that's going to give me much bigger profits than that losing trade. And likewise that one as well. So as I mentioned, the whole goal of trading is to keep the losses small and the profits large. That's the only way you can be profitable in the market. So just to answer a final question, why do I trade with TradeDirect365? The reasons why is they offer low commission. I can trade from as low as $5. And then after $5, it goes up to 0.07%. I can trade over 500 ASX share CFDs with margins from as low as 5% to up to 30%. Some CFD providers have margins right up to 90%. Plus, the big plus for me is that I can short sell over 500 ASX share CFDs. Now, nearly all the CFD providers out there only offer about 160 to 170 share CFDs that you can short sell. So you are limited mostly with short selling. Plus, I can set guaranteed stop loss orders on about 300 of the ASX share CFDs. Now, guaranteed stops means I will pay a small fee of 0.3%. So if it was a $5,000 trade, it would be $15 to set it, but it's guaranteed to exit me out at that price no matter what happens. The stops that you saw me set were just normal stops. They weren't guaranteed, but if I had have ticked the guaranteed box, I'd pay the 0.3% and then it's guaranteed. And I can adjust it as it goes along at no extra cost. Now, the other thing is TradeDirect365 are offering a $365 trader's safety net, which means that for a limited time, you can trade for a period of 30 days and they will refund you up to $365 of your losses. So it's just a way to help you get started and build confidence when you're first starting out and ensure some of your losses are protected. Now, there's more information about that on their website. Plus, I've negotiated a special smart trading offer whereby anybody that opens an account with TradeDirect365 and puts smart trading in the How Did You Hear About Us box, you'll get a $100 bonus into your trading account if the account is open before the 20th of December. There's more information about that on my website. So if you go over to my website and click on CFDs, there's information about it on there. So there's a few conditions where you can't actually withdraw the money for 30 days after you've been trading, and also after 5 trades have to be completed in your platform as well before you can actually redraw the bonus amount out of your account. So for more information, head on over to TradeDirect365, and if you open a live account, remember to put smart trading in the How Did You Hear About Us. There's also a demo account you can get set up to have a play around, and there's some video tutorials to teach you how to use the platform as well. But it's a very simple, easy to use platform, and that's what I like. It's not complicated. Now, I know I said I had a final question. I have one more. Do you have a trading plan? Now, trading is a business. In order for a business to survive, it must have a plan. And when you trade the markets, you are putting money at risk with the goal of achieving a profit, just like any small business. So you need to treat it like a business, and you need to have a plan that sets out how you're going to manage it. If you need help with that, I've got my book Smart Trading Plans, and it's a step-by-step guide to developing a trading plan. And Money Magazine listed it as the top 10 best-selling finance book back in 2010, so it is a good book. Plus, you get free bonuses of $59 when you buy my book. You go to my website and you can download your free book bonuses, which includes a Word document of a trading plan template to complete as you work through the book, and also a position sizing calculator to help you position size your trades. So you can buy a hard copy from my website, smarttrading.com.au, and it's also available in Kindle version from Amazon. Plus, I also do share my personal trading plan. If you want to know more about my trading systems and how I trade, I have an ultimate online trading course called the Smart Trading Plan and System Development online course. Now, that's the course in which I teach everything that I do. It's a 12-session course that basically guides you step by step through my trading plan. You get the Metastock codes to my trading system. If you don't have Metastock, I teach you what the codes mean so you can code it into your own trading software. And I teach you all my trading strategies in there and show you how I trade the market and what I do each day, each week, each month and each quarter with both my trading systems, my weekly long and my swing trading system. And it's all about getting inside my head and discovering how I trade the stock market. Each course session comes with comprehensive course notes, supporting audios with MP3 downloads and videos as well. So you can purchase it from my website on its own or packaged with other products such as my Smart Trader spreadsheet, with Metastock training, also with Mastermind support membership. You get annual membership if you buy it with a package, and that's my ongoing support program. And I have a few webinars a year with my clients where I share my personal trades and we talk about the current market action. And there's also one-on-one mentoring options with me as well. So head on over and visit www.smarttrading.com.au From there, you can download my free special report and get your top 10 tips to smarter trading. And if you do sign up to my free special report, you'll also go into my database and receive my bi-monthly newsletter. So I have a great newsletter I send out every 2 months, and I record a video as well as part of that newsletter, which I always receive great feedback on. And if you have any questions, feel free to contact me. My contact details are in the Contact Us area of my website. So thank you very much for joining my webinar this evening, and I'm going to put it back over to Davin now and say goodbye. So thank you.
For more information and access to TradeDirect365's platform, visit us at tradedirect365.com.au. I'm Davin Clark, and thanks for watching.